Welcome back to Dinar Scope, where we cut through the rumors and get to the facts about the Iraqi dinar, the Vietnamese dong, and the global currency market. Today's headline is one that's been shaking up a lot of conversations: Dinar and Dong truth bomb. Banks shut down secret payout myths? If you've heard the whispers about banks secretly offering massive payouts or hidden exchange rates, you need to hear this entire video, because what we're about to break down will completely shift how you see these currencies in 2025. So let's start with a reality. Checked. Every week, more and more people rush to currency dealers or online forums hoping to find out if the banks have finally confirmed some secret RV rate, but the truth is very different. Banks update their systems daily using real market numbers, not secret payout schemes. The live rates you hear directly from banks like Chase, Wells Fargo, or Bank of America are exactly what's being traded in global markets right now. Anything else floating around the internet is speculation or misinformation. It's designed to keep you hooked. This is where the confusion really takes off. Many Dinar and Dong holders believe that secret backroom rates exist and that insiders are cashing out while the public is left waiting. But let's be clear, banks do not run double books, and they do not invent hidden numbers for special customers. The rates they publish are live, transparent, and confirmed by international markets. If a banker gives you a rate today, it's because that's what the currency is worth today. No more, no less. Let's focus first on the Iraqi dinar. According to the most recent confirmations, the dinar is trading at about 1,320 dinars per US dollar. Some rumors have spread suggesting banks are offering one-to-one exchanges behind closed doors. But when we contacted multiple institutions, including Bank of America and Chase, we found no evidence of this whatsoever. In fact, Wells Fargo doesn't even handle Dinarr for retail customers at all. These live confirmed numbers tell the real story. Here's the part most people overlook: redenomination versus revaluation. Redenomination happens when a government removes zeros from its currency to simplify calculations. It does not increase the real-world buying power of your money. Turkey did it in 2005, removing 6 zeros from the lira. 1 million old lira became 1 new lira, but a loaf of bread cost the same before and after. The magic payday never happened. This is where so many dinar holders set themselves up for disappointment. Let's say you're holding 1 million Iraqi dinars. At the current rate of 1,320 per dollar, that equals about $758. If Iraq removed 3 zeros tomorrow, that million would become 1,000 new dinar. But the exchange rate would also adjust likely to around 1.32 per dollar, leaving you with the same $758. It looks dramatic on paper, but changes nothing in your wallet. Now, let's switch gears to Vietnam. The Vietnamese dong trades at roughly 24,000 dong per dollar and has been remarkably stable for years. Vietnam's economy is growing, yes, but growth does not equal overnight revaluation. In fact, Vietnam keeps its currency intentionally stable to support exports. A suddenly stronger dong would actually hurt its economy by making goods more expensive abroad. Stability, not surprise gains, is the government's priority. Many people confuse revaluation and redenomination. Revaluation means a currency genuinely rises against others, driven by stronger fundamentals. Redenomination is just removing zeros, a cosmetic change. Venezuela is a perfect example. In 2016. They lopped 3 zeros off their bolivar. It looked cleaner on paper, but the purchasing power didn't magically multiply. Vietnam is far more stable, but the principle remains the same. Here's how banks actually confirm rates. Every day, banks sync with international markets and central bank feeds. They do not invent numbers or offer VIP rates for certain customers. If you check xe.com or ONDA and then call your bank, you'll notice the rates line up within fractions of a percent. That's the truth. Everything else is noise. Let's also tackle the myth that currencies are like stocks. They're not. Stocks can grow as companies expand. Real estate can grow as demand rises. Currencies are more like a tug-of-war between economies. Gains are slow, losses are sudden, and long-term windfalls are rare. Professional traders spend years studying charts and still struggle to consistently profit. Expecting Dinar or Dong to suddenly turn you into a millionaire is not investing, it's gambling. To put it in perspective, a $1,000 investment in the S&P 500 10 years ago would now be worth roughly $2,600. That same $1,000 in Dinars, still worth about $100 today. The comparison speaks for itself. Historical performance shows that currencies rarely provide life-changing returns outside of crises. And even then, they usually collapse rather than rise. Currency dealers add another layer of reality. Legitimate dealers make their money on the spread between buy and sell prices, usually taking a modest 2 to 5%. They don't have access to secret RV numbers. They don't promise millions overnight. Any dealer making such claims should set off alarm bells immediately. Trust only those who deal in transparency and market-confirmed rates. Looking forward, what could realistically happen with these currencies? Iraq is still tied heavily to oil and struggling with political and economic challenges. Stability may allow the dinar to strengthen gradually, but think in terms of years, not days. Vietnam's dong will likely remain steady because that supports its export-driven economy. Incremental change is possible, but a sudden flip to riches is not. So what's the smartest play for holders? First, don't risk more than you can afford to lose. Second, set realistic expectations. Third, diversify. Your long-term security should come from proven investments like index funds, bonds, or real estate. Fourth, never trust promises of guaranteed payouts. There is no such thing. If you're thinking of buying Dinars or Dong now, research thoroughly. Look at IMF and World Bank reports. Study trade balances, economic growth, and political stability. Recognize that external events like wars, crises, or natural disasters can swing currencies sharply. But even then, those swings don't always work in your favor. Let's revisit the numbers again so they stick. $1 equals about 1,320 Iraqi dinars, or 24,000 Vietnamese dong. These are the real verifiable rates today. Anything else you hear online is rumor or hype. Holding speculative currencies while waiting for a mythical RV comes with a huge opportunity cost. You could be putting that money to work elsewhere. Social media amplifies myths. Influencers spread stories of secret cash outs because it generates clicks and followers. But banks don't play that game. They stick to market data. Your best defense is knowledge, not hope. By focusing on facts and leaving myths behind, you're protecting both your wallet and your peace of mind. So here's the bottom line. There are no hidden payout rates. There are no secret overnight millionaires waiting for you to join them. The Iraqi dinar and Vietnamese dong trade at the live market rates we've shared, and those are the only numbers that matter. If you take anything from today's truth bomb, let it be this. Protect your money by protecting yourself from false promises. Stick with real data. Diversify your investments. Never let hype drive your decisions. Thanks for watching Dinarscope, where we bring you the facts, not the fantasies. If this video helped clear up the noise, make sure you hit that like button. Share this with others chasing the same rumors. And subscribe for more grounded updates on the Iraqi dinar, Vietnamese dong, and global currency news. Knowledge is power, and it's your best tool to keep your financial future secure.